VP Brokerage Distribution and Strategy at L&G America. Farron and I met many years ago. I think it was at the Milliman New York conference where both of us were invited as guest speakers, right, Farron?
Yes, yeah.
So today at L&G America, Farron works with an amazing team to drive growth, leveraging technology to accelerate opportunities with broker channels, but startups and many other different contenders within L&G America ecosystem. Farron is an entrepreneur too. He started Jerry, a concierge service platform that used data and licensed social workers to help thousands of Americans navigate requirements and support for long-term senior care. Farron and team sold the company mid-2021, so very recently, and then Farron came into L&G America. So thank you for being with us, Farron, today. And after my little introduction, I would love to talk about your parcours because it's quite fascinating, actually. And if you could dive into why you started in corporate, in corporate America, corporate Canada, and then became an entrepreneur too.
Yeah. So, I mean, actually, I started, right in university, co-founded a bookstore in a retail shop way back when. We did okay, helping communities basically generate revenue and recycle goods, so essentially used textbooks, consignment items. And that was a nightmare. It gave me an ulcer. It was very, very stressful dealing with web ordered POSs. And this was, more than 20 years ago. Before platforms like Shopify or even AWS existed. So it was a nightmare dealing with inventory. So we did okay. We exited that business, and then decided I needed a bit of a break, and then also just corporate business training. So then I joined IBM as a consultant, and like that, again, big brand, whatever. I thought there'd be like lots of institutional learning and training and development after, trying to figure out all this technology, and this is back when like ASP.NET and microservices were just getting started. And then what ended up happening is my wife, girlfriend at the time, she had just completed graduate studies in computer animation. And she was looking for a job, and she was looking at, Pixar and DreamWorks and Lucasfilm and ILM. But the problem as Canadians, as you mentioned, is it's impossible to move to the US unless you have 10 years experience or a PhD. And she was at this conference in Los Angeles, and one of the recruiters just said, hey, look, like we opened a new business, a new office. This was Lucasfilm. We opened a new office in Singapore. It's very, very easy to move to Singapore, like to immigrate. And George Lucas, the creative Star Wars, really loves hiring talent. And so when my wife, girlfriend at the time, told me about this, I was in Winnipeg, Manitoba, Canada. It was November. It was freezing, right? It was like minus 40 degrees Celsius, like terrible. The sun sets at like 3 p.m. and you're in darkness. And so I just Googled Singapore. And then the first thing that pops up were just pictures of palm trees, right? And then I Google like IBM and Dell and Microsoft, again, big corporates, thinking that'd be the easiest way to go. Realized that they had openings. And so 3 weeks later, we just bought one-way plane tickets and ended up moving to Singapore just on a whim. We didn't know anyone, didn't have anything lined up. And then we ended up spending, 4 years there. And then that's where I, got a job first at Aviva in project management and then product development. And then was leading marketing, like the chief marketing officer of the Indonesia business that we bought. And I loved it, it was great. Like it's just so high energy living in Asia, our businesses were growing, 20% year on year, just like, and that was right after the recession, right? Like 2008, the global financial crisis. And so, yeah, we loved it. We're doing that. And then what ended up happening is family, right? So we had some issues, like my mother-in-law ended up getting pancreatic cancer, which is, terminal, right? Like that and sarcomas, like soft tissue cancers, or recalcitrant cancers that haven't seen any mortality improvement in, over 20, 30 years. And so we had to move back pretty quickly back to Canada. And then that's where I joined. Well, in between, I joined the Boston Consulting Group, but then I decided to join a reinsurer, RGA, Reinsurance Group of America, out of Toronto, just to be closer to family. Like, we're originally from Toronto. And then, how that stuff happens, right? Like life and career and just like opportunities and solving interesting puzzles. And then at RGA, after I was leading global product development for a year. So thinking about trends across the globe and trying to bring them to our partners, the large insurance companies, right? Looking at critical illness or disability or high net worth products and underwriting. Greg Woodring, our CEO and co-founder of RGA, so he started RGA and grew it into this $20 billion company or $10 billion company, took it all these markets over 40 years, just asked 6 of us to think about, frankly, where does the next $10 billion of revenue come from? And then that became RGAX, moved down to St. Louis, Missouri, and we started NewCo. I was employee number 2, but eventually we got up to 400 people. And that was right at that cusp of InsurTech where it was, we're really sure, should we be investing? Should we try to be building organic stuff? Should we be going direct? It was really, really exciting. I spent 4 years there and it was great. I really loved it, just going deep. And then again, another life change happened. Like we knew we were going to have a daughter. We wanted to be closer to family and we always wanted to live in New York City. So we decided to move to New York City. And then we raised $4 million to start Jerry. And so together with my co-founder, Jay Rajani, who was at Tala, like a micro lending startup that has, raised $200 million. We decided to focus on finding non-obvious sources of data to be able to help families personalize recommendations around decisions. And that was, again, inspired by our personal story. So my father, he had Alzheimer's dementia. And so just going through that process, just super confusing, super alone, super frustrating, just like all this stuff that we could probably talk about that was like a nightmare to deal with. And so, yeah, we did that. And then when the pandemic hit, my father actually ended up catching COVID and passing away. And then there was a lot of demand for this type of data. So we had hundreds of data points on 40,000 communities, executive director turnover, planned ER visits per staff. And so we decided to sell the business in May to Refern Financial. And so that's where, up until 6 months ago. And then now I'm at Legal & General, again, the world's 11th largest asset manager. But in the US, it's a really nimble business. And they've invested so much in digital. And one of the things I'm really passionate about is how can you find, how can you help the underserved get adequate, affordable protection, right? Term life. And I think you have to use technology, digital, to be able to reach them and empower brokers to do that. And so, yeah, it just made sense to come on board and I'm really, really loving it. It's been 3 months, but there's a great team. It's a small, nimble team. And yeah, we're the number 1 in terms of brokerage distribution for term life insurance. And then we have huge ambitions. So sorry, that was really long-winded, but that's kind of the blow bow, I guess, where I've come.
I mean, what is fascinating is your path, right? International path as an entrepreneur. So you've actually experienced, I would say, the ups and downs of entrepreneurship. Then you went to Singapore. So we can't, taking your luggages and moving country. It means, look, me coming from France to the UK, and I did it because I just wanted a different life, but also to study. But that opened up, that is a profile, right? It's already determination and wanting to actually find new things. So fascinating to me. We also have something in common, which is IBM. I also started my career at IBM, PwC, through the acquisition of Monday, for those who remember those days.
Yeah.
And amazing experience, great team. And a lot of my method and my structure come from those days, actually, consulting approach. I learned a lot of those things then. And then, going back to entrepreneurship and going back to So that is very unusual, but it's like a zigzag, right? And giving you always so much different insight on both sides of the journey. And I met you when you were at RGX, and I was fascinated by the team, the dynamism, and the speed of doing.
Yeah, well, that was one of those things where it's almost like I've always been fascinated by problems, and so what's the best way to solve the problem? Sometimes it's, with a clean sheet of paper, with no rules. And then sometimes it's leveraging, a 100-year-old brand and a $40 billion balance sheet, in the case of legal in general. But it's almost just like those problems. And I think of it almost as like, Tarzan swinging, right? So it's like up and down or zigzag, as you say, where it's like interesting problems, can be solved, whether it's within an incumbent, or, on your own. And sometimes, it makes sense depending on the scale of the problem and the timing to try to just figure out. And as long as, to your point, right, as long as you're learning, right, like it's almost like that, the consulting approach, right? Just like as long as you're rapidly learning and reassessing your challenges, your assumptions, you're rethinking it. I think that's the most enriching part. Obviously financials, economics, like they play a part, but the learning is the most important.
As you would say, as an entrepreneur, learning to fail or learning to adapt fast, right? Because every lesson is to do better.
Yeah, exactly.
The one thing which came to mind is learning from your corporate side and your entrepreneurial side. What can you share with us around ups and downs, which have been really positive for you to shape your path?
Yeah, no, definitely. So I'd say on the entrepreneurial side, again, at a venture-backed startup, the default mode is dead, right? So again, venture-backed startups, even though from the outside, it might seem like $4 million is a lot of money, or $50 million is a lot of money, or $100 million is a lot of money. But money doesn't solve anything, because fundamentally, until you are Google, right, or Apple, where you're printing this monopoly cash flow, that money is an investment in the future, right? So you will have to raise more capital, in 12 months or 18 months. And the default mode is death, right? Because you will run out of money because you're not profitable, right? And you're not. And then also, when people give you that amount of money, right, the other thing that people really don't understand is it comes with just expectations, right? Like the $4 million, again, like when we were talking to Jerry, and one VC was like, oh, that's an interesting business. I could see it being successful. How big can this be? I'm like, well, there's a competitor that was acquired by private equity for $1 billion. And they just said, that's not big enough. Right? Like $1 billion exit isn't large enough. Like we want to invest, even if they're only writing a $2 million check, they're like, we want to be in markets where the companies can do, $10 billion exits. Because again, you just work through the waterfall of like, this company is going to have to raise $100 million. If we're going to own 10% of it, 10%, we want $1 billion exit, like personally, right? As a fund, not $100 million exit. So understanding that as the entrepreneur, right? Of like, those are kind of the big expectations, and then it's really just how do you stay focused and be relevant, right? And like try to continue to hit those milestones and be laser focused. Whereas I think on the other side, within a corporate, right? I think the biggest thing is, to your point, how do you move fast, right? Like that agility, because the one advantage startups have is they can move ridiculously fast because there's no process, or very little process. There's no ways of doing things, and there's no best practices. So you're making it up as you go. So you can find, that innovation and continue to exploit it, right? And then try to find distribution, right? Whereas within a corporate, you have distribution, but you might not have the innovation because you're so efficient, right? Like you have processes, you have all these like best practices, committees, procedures, meetings that kind of manage the process to be very, very efficient. It's like a, machine or a factory, right? Like you could do one thing really, really well, but you can't really pivot. And so for the company, the big corporate, I think the key is how do you try to be nimble, right? Like how do you try to be less a, conveyor belt, or be a conveyor belt when necessary and be able to spin it up, but still being able to, not be laser focused on the assembly line, but not miss out that that potential lightning in the bottle and jump on those opportunities quickly, and then deploy all the expertise you have, distribution, capital, brand, and talent, to be able to attack a problem. And that's where I think, again, the tech giants do phenomenally well, right? Like Amazon, Netflix, Apple, Google, where they do that internally as well as externally by buying companies.
Yeah. Well, one thing you are saying, and I think you started with the point, is it's great to get money from VC, right? It's all about financial return. So startups out there, don't think that 1 billion valuation is good enough. Actually, it's 10, 20 billion for anyone to have a decent exit. Partly the significantly big VCs, which are there. But I think the second point you actually highlighted is strategic returns, where actually corporate venturing, where a corporate become part of the equation, which are the distribution power. They have, as you said, the method, combine that with the startup's nimbleness and chaotic way of doing things and speed, can actually have sparkles, create sparkles, partly when one needs a customer to buy the product, right?
Exactly. Because I think that's exactly it, right? Like within corporate venture, you have a strategic return, a lens, whereas financial VCs, it's just purely, gross IRR or total value of paid in capital, like multiples, right? So, again, to try to be in that top quartile of the Cambridge, I think it's like Cambridge Analytics report or whatever, the benchmarks all funds by vintages. Whereas corporates, the benchmark is largely Wall Street, right? Unless you're a mutual or a private company, Wall Street / whatever, the London Stock Exchange or Hong Kong Stock Exchange, but it is, price earnings and your share price, right? So what you want to be able to do, has to be, generate a return on invested capital, right, within the company, but then still have that story that fits so that an analyst can understand it, right? Because again, what I'm seeing, particularly in insurance, right? The insurance stories, right? Aren't as interesting from equity analysts compared to growth stories, right? Like the technology growth stories, where you look at some of the price earnings ratios, right? Of like all these companies, they're like, 40 times like earnings, et cetera. Whereas like, again, insurance companies are still valued on a book basis, right?
And what we are seeing recently, probably the stock market and some of the IPOs we have seen in the SPACs have not done as well, right, as we expected.
Exactly, 100%, right? So, and that was always the question, right? Like, as you're seeing these valuations, like, okay, that's great, but is this company really more valuable than, MetLife, Aviva, whatever, right? Like, a $30 billion balance sheet. And then to your point, like, you look at, again, more PNC companies that have launched. So I don't know that space well, but you look at IPO, when they SPAC'd, whatever, 2 years ago, 3 years ago, and then their performance now. And it's definitely not keeping up, I guess, with at least the pre-IPO expectations for sure.
Absolutely. So that takes me into, and you started mentioning some of those. So what are the trends you are riding on? Because you're actually in the life and health sector. That's what I know you from with RGX. So what are the trends you are looking at every day to actually shape a better future?
Yeah. So, I think of it as, again, now at Legal in General, we just want to be able to cover the most amount of families with affordable protection, right? The most number of Americans. Like the only way to do that, right, is by using technology, right, to really digitize the process, personalize everything, right? Like personalize rates, right? Personalize the experience, the journey that the policyholder goes through, both from applying to also claiming, the product. I think we are candidly the market leader on probably that application part, but we still have so much work to do on the back end. But then the other key is not just, invest in technology and digitize the experience and apply machine learning and like insights and data to improve the journey. But I think you also then have to work with partners, right? Distribution, because fundamentally, you could try to dance around it. I'd love to be convinced otherwise, but particularly life insurance, right? Mortality coverage, is sold. It's not bought, right? Because It's a difficult product. It's very optional. It's very, very opaque. And it's morbid, right? Like no one wants to talk about death, right? Like my wife, like we've been through so much together, like so much, like parents dying, all this stuff. And we don't talk about death, right? Because like there's an aversion to it, even though we have, one kid and one on the way. And I live and breathe this all the time. When I bring up, hey, maybe we should get more life insurance, or you should get life insurance, like, I don't want to think about it, right? And so that's when it has to be sold. And again, who knows, like, but I think the best way to sell it, particularly complex, like life insurance products, that are long duration, right? Like 10 years, 20 years, whatever, is through independent distribution, right? Like, whether that's via phone, email, chat, face-to-face, whatever, but, reaching the customer how they want to be met, right? Like, I think like omni-channel, that just makes sense because like, again, 300 million people in the US, let's call it whatever, 2 billion, 3 billion people in that middle class, right? Across the globe, that require protection, saying that they're all going to use one thing, like I don't think there's a magic bullet, right? Because even you look at like iPhones, right? Like they're dominant, but Android is still whatever, like what, 80% of smartphones or something? Maybe not the value, but 80% of usage, right? So how do you try to like empower distribution, right? Like independent distribution to be able to reach customers to make sure they're rewarded, right? And independent distribution might be banks, it might be agents, it might be, embedded platforms, like mortgage companies or something like that. But yeah, I think those are kind of the biggest trends, that I'm focused on. And then the third one and final one is how do we just like maybe change the narrative? Again, the biggest insight around life insurance is it's really depressing, but everyone's aligned to live longer, right? Like the insurance company wants you to live longer, like you want to live longer. So maybe, and again, like I know in the UK, like Prudential and Vitality are doing that well, but it's like, how do you change that narrative to be around like living in wellness, right? And being a partner, right? A subscription to like unlocking benefits, and does that actually move the needle, right? Like result in bending the mortality curve, right? Like keeping people alive longer. I think that's the holy grail. Again, maybe we'll get there in 10 years or something, but that's one of the things that personally is on my radar as well.
It's interesting, right? Because when we think about life insurance, it's about death, but we have seen amazing propositions such as U-Life, using that life, that longevity, that health and wellness angle to actually convince the Gen Zs and younger populations to actually care for their behavior and therefore their lives, and so therefore behave better and therefore being happier as well.
Yeah, exactly. Because I mean, that's it too, right? It's like people like protection, the insurance industry or life insurance industry kind of thinks it's like, oh, you had this terrible, like, yeah, when my dad died, right, in April last year, he had a very small whole of life policy. And it was like, when we filed the claim, it's like, oh, $50,000 or something like that. Again, like minimal, like, whatever. And my mom paid for the funeral with it, and then also gave it to, my sister and I. And I'm like, well, we don't really need it. And we don't want the money, right? Like from the insurance perspective, it's like, I don't want the money. I just want my dad, So it's like, whereas I think in the insurance, it's like, okay, cool. Like you paid us money, we give you money, we're done. Whereas it's like, no, it's not that, right? It's all this other stuff. Like, how do you manage grief? How do you manage counseling? How do you like get on with your life as necessary? And how do you make sure like the legacy is honored, not just through cash, but, the outcomes, the desires that those people have. And I think that's the opportunity that, again, that's the blue ocean, right? Like that's the white space, that's the green field, insert metaphor or whatever, but that's the opportunity that, we could be going after, as an industry, because there's probably not just one company that can do that.
Absolutely. That's where I think a lot of innovation is coming, where we start really understanding the drivers of people, their behavior, and so therefore replacing money with things people care for, such as some of the items you mentioned, managing grief, so maybe mental health advice or consulting, the process of, burial as well, a will early stage will design, which I think the startup environment and ecosystem have been quite challenging in readapting old way of doing insurance into new ways. You mentioned a keyword, and I want to type into that word, which is embedded. As you know, this is a keyword of 2021. Probably it will be a keyword of 2022. So what does embedded life mean? Life insurance. So, what in your world do you see being embedded?
Yeah, it's interesting. I mean, again, it's not quite there yet. And it is a keyword, or it's a new word, but on the life side, I mean, travel insurance has been sold. Like if you buy plane tickets on United right now, or I'm sure Southwest or whatever, you're always offered travel insurance, right? Again, that will typically cover just, loss, delays, baggage, etc. But some of the products, have life coverage. I know you can buy it at like Tokyo Narita. Again, I haven't been to Tokyo since this whole thing started, but I know for a fact, like you can go to ATMs and buy life insurance and travel insurance at an ATM at Narita Departures. Like I've seen that, multiple times whenever I flew through there. And so that's an example, I would say, again, like a 1.0 example of embedded, right? Where it's like you have this event, can you be covered for a limited duration? And then it's almost bundled in, to the coverage, where you're not really having to worry about like going through very extensive questions or an onerous application. And I think the key is the consumer, like the applicant, is still like mentally primed, right? Like they're in the headspace for wanting to purchase coverage, right? They're like, oh yeah, it makes sense, right? Like I bought some, like again, it's not life insurance, but I bought sporting event tickets. They were like $1,000. And with Omicron and stuff, I was like, yeah, I will pay $60 for cancellation insurance so that, if we can't go, we'll be able to claim back that $1,000, for our party of four. And so I think that's kind of the key with embedded, right? And then where can you take that? And again, like in the US, there's a bunch of startups that were looking at it, like Spot and stuff like that, of just like micro insurance coverages, or Buddy, I think, where it's like accident insurance tied to ski resorts or trips and stuff like that. And I think that's cool, right? Like I think that's very, very interesting. The challenge, at least in the US, particularly on the mortality side, has been there's a non-contestability period of 2 years, right? So essentially, all these onerous underwriting requirements, are used because if you discover that there's fraud, on whatever month, 2 years and 1 month afterwards, you still have to pay the claim, right? So even if like it's like, hey Sabine, you said you weren't an alcoholic private pilot who scuba dives, and then you we find photos of your Instagram and that's the cause of death, but on year 3 you'd still have to pay the claim, at least in the US. And so that's kind of the challenge, particularly around like long duration. I go back to, again, 10-year, 20-year, 30-year contracts, right? And so that's kind of the challenge. And again, it's such non-proportional risk, right? Like for $1 million of life insurance coverage in the US, and the US has the cheapest rates around the world, right? For $1 million of life insurance coverage, it probably costs you maybe $30 a month, depending on your age and your amount. So it's like pretty cheap. So as an insurance company, it's like you're only making like whatever, $600, $700. The advisor isn't really even making that much, in the first year, making $600. And if you do claim after 3 years, someone has to pay $1 million, right? Which and that's kind of the challenge, like the non-proportional risk. And then there's some inside baseball around the regs, that make, I think, long duration embedded, like, I don't know, like I'd be interested to see how that evolves, but I think the short-term stuff is really, really exciting, and yeah, companies like my friend, Rodan is at Spot, I think, and doing really interesting stuff there.
Yeah, we reviewed Spot, so we do a lot of R&D labs, and over 3-4 years ago, we spotted Spot as part of our work for one of our partners, and we really impact that business model, and so that allows companies to start looking at partners. For my goal is, I always say to insurers, why build when you can partner? That's my motto. But also, when you start actually seeing business model alignment, you can actually sometimes takes time. As we know, things takes time in insurance, but at least if you actually put those companies on the radar, you can always find opportunity for partnership and investment, at least during a specific period of time. And that's
100%, because, and that's almost it too. I think, again, I remember a competitor of ours now, Legal in General, but one of my clients when I was at RGA, a large mutual company, they used to have like a furniture department, right? Where they used to make furniture for the company, right? So it's just like, obviously that disappeared, I guess, whatever, in the 80s or something, or 70s or 60s, who knows? But like, no insurance company today, no company would make like furniture, like unless you're WeWork, right? Where it's like crucial to your mission and to your point. And that's the idea where it's like partnering, right? Like, it's like, how do you partner with best of breed, really understand what you're good at, what your unique insight is, what your network effects are, whether it's around data, distribution, customer service, and then be able to deploy that or partner with others to deploy that and bring that to customers.
So, one thing you just mentioned is that network effect. And, my brain, I could see a big brand in the United States called Caterpillar, which actually moved their business model from, selling drills to renting drills. And what I love with that business model, it's also it has become a sustainable business model where actually it's as a service, the drill get broken, they're being replaced and so on. How do you see sustainability and creating a circular economy working in the life sector?
Yeah, it's a good question. I mean, oh geez, need another coffee to think through it. But so I'd say it's like, so to try to create a circular economy, right? So like the obvious stuff, right? Like the stuff that I think every insurance company, Legal in General included, is doing is life insurance companies have huge balance sheets, right? That we manage assets for our policyholders. So again, going back to that $1 million, right? We have to, it's not an IOU, it's a reserve, like it's the future benefit, right? That's how we think about it. So you have to manage that relatively conservatively to make sure that if a claim does come up, that $1 million death claim, we have that, right? We don't have to go to the market. We don't have to we have that available, right? Those are reserves. So in essence, it's not our money. We're just managing it for our policyholders, right? At the highest level. I think that's the biggest opportunity, right? Then the lowest hanging fruit, towards sustainability and Legal in General. That's kind of a steward. That's why I joined them, right? Because it's all about inclusive capitalism. So not just carbon neutral, but reinvesting in communities, both in the UK as well as in the US, and deploying that balance sheet, right? Like $60 billion, $30 billion, whatever, huge amounts of sums. But can you do that in a positive way that just leaves the world being better, right? Like your local community better. I think that's the lowest hanging fruit. I'm proud that I work at Legal in General. That's leading the way there. And then when you get into the next order impacts, right, of okay, you look at investments, and then you can then look at our spend, right? Like as a company, again, 30% of the premium is roughly expenses, right? A lot of that might be salary, but some of them might also be the partners that we work with, right? How we choose to travel, how do we be more efficient? How do we be, more positive to the environment? I think that's another thing, that we can invest in. And then finally, again, with life contracts, right? There's always a question of how can you, to your point, make it better? The example of recycling that drill is so beautiful because it's a tangible item and you're depreciating the capex. Whereas in life insurance, the core product is essentially a contract, right? So I don't know if that really applies, but just brainstorming, it's that contract again has other tangential benefits or riders, right? Going full circle into wellness, right? Maybe it's offering in helping people live longer, like discounts to gyms, memberships. Again, these are all things that can help, that again, if you're able to do something really big and spread the cost or depreciate the cost across others, that might be really, really impactful. And so bringing, 1 million customers a new benefit might really spur adoption and just push that agenda forward in terms of sustainability. And so that's again, stuff that's like more like wave 3, like emerging, that, you know, I don't know what the answer is. I don't even know if like there's like really concrete case examples out there, but that's the opportunity, you know, that everyone, you know, could probably be thinking about. And that is, you know, the $1 trillion question, right?
Yeah. And one I think will be an interesting one to investigate further in the year to come. You know, I've been observing what L&G has been doing in the UK. You know, net zero homes you are building, creating jobs in the north of England. I was fortunate to sit, you know, beside one of your colleagues at one of the recent award ceremony, and we talked the whole night about it. And it was fascinating to see the passion and the decision-making process around your work, around creating jobs, creating financial resilience, and using data to make this happen in the future. So congratulations, Farron.
Yeah, no, it's one of the reasons, again, like legal in general, like it's like, you know, particularly in the US, you know, our partners still call us Banner Life for William Penn. But, you know, the Legal in General group is doing phenomenal work in the UK, you know, the home market, and then also investing very, very heavily in the US. And it's like, and I think that's like the poster child of like what can be like a responsible steward. And we're, you know, stock listed, you know, like we're a publicly traded company. So you don't have to do that within a mutual or fraternal, which I think is kind of the default, at least in the US, or, you know, to a recent extent, the UK, where it's like the mutuals or the fraternals, we're trying to be these like public benefits. But I think you can be responsible, you know, and realize that, you know, can you smartly use data and your leverage to impact the greater good and create a more inclusive future, you know, for everybody.
I want to try 3 words with you. So first word, industrialization. Second, democratization. And third, monetization. What do those words mean to you as we move into a future tech world?
Yeah, interesting. So I think industrialization will come to AI, right? So when I think of industrialization, it's like, how do you make it very, very easy to deploy, you know, again, manufacturing, right? Like China, you know, making shoes and like plastic widgets. I think the same thing's going to happen at AI, robotic process automation, looking at data. And so that will happen to AI, and that will, you know, leapfrog all industries, right? Like apply to everybody, not just the hard tech, like the big tech companies, but that will hit insurance, that will hit healthcare, that will hit everything, right? Everything. Democratization, yeah, it's interesting. I think, again, like decentralized currencies or cryptocurrencies, or distributed, you know, blockchains, right, are really going to play a crucial role in democratization in the future, just because we're seeing it, right? Like trust is at all-time low, at least in the US, and I'm sure probably to a lesser extent in the UK, but in governance, like in governments, in public institutions, even companies, right? Like, you know, 4 years ago was Facebook, you know, viewed as what they're doing, right? So I think true democratization comes when we have powers and tools that aren't really beholden to large entities, right? Whether that's Facebook or government or things like that. And so I think when we have powerful tools, right, like Web 3.0 tools that really give democratic access and power, you know, back to individuals, you know, that's when we really unleash it. And then monetization. Yeah, I mean, geez, like what's going on right now with like, who knows, right? Like, so again, like, I think of, again, my broad brush like career, right? Like it's like, you know, how to start up pre-2008, and then the financial crisis hit as we were in Singapore. And you see all these ripples, right? Where it's like after the global financial crisis in 2008, you know, the response was, let's just print more money to avoid a global depression, right? I think that worked, but it inflated asset prices. And then we're at a 0% interest rate environment for essentially 2 decades. Right. And at least in the US, when you look at some of the competitive responses of the insurance companies, as well as private equity companies, right? Whether that's Sabine, whether it's KKR, whether it's Blackstone, whether it's, you know, Prudential pulling in and out, or Principal, you know, again, these are all public examples. I think that's the challenge when people thought you're going to be in a zero interest rate. You weren't going to be in a zero interest rate environment, or it might only last 5 years. But in essence, we were there for 2 decades, right? Like 2008 to 2018, right? Starting to exit it. And then the challenge is then annuity markets fall apart, investment returns fall apart, like all these like long-term contracts fall apart. And then the second thing now after coronavirus, right, like the pandemic, you know, I remember $778 billion in the US was a large stimulus. Whereas now it's like $2 trillion is just like table stakes, right? Like, and so again, monetization, like, again, from an entrepreneur, like how you make money, subscription to all that stuff. But I think from like bigger macro perspective, right? Like, what does the value of money mean, right? Because money is like, it's a debt obligation, right? Like it's an IOU. But the rapid inflation that we're seeing, and again, people say that it's temporary, whatever, but like 6%, like we haven't seen that, right? Like in our lifetimes, right? Like
No,
it's
we
like
have not.
1980s. And so yeah, I don't know, like it'll be really, really interesting to see, right? Like how to ride that out. You know, we're in an era of super abundant capital. How does that impact, you know, people's subscriptions, right? Like $30 a month, even $1 million debt coverage, right? Like that might be the equivalent of, you know, my dad's $50,000 policy, you know, 10 years from now, we're like, oh, $1 million, like $50,000 is a lot of money. Don't get me wrong, but it's like, it's not, you're set up for life, you know?
No, it's not, as we know. And when you look at your retirement and you plan for retirement today, you probably, I would say, would do well, or at least be able to pay yourself, you know, your rent or your home, and be able to do a little bit of travel. You need to probably triple, quadruple, quintuple this number to feel like you may live up to 90, maybe. And now we probably need to plan to 100, 120. So yes, 1 million is not enough. So Farron,
Yeah.
what would be your last word of wisdom for our change makers? You know, what would you like them to remember from our chat today?
Yeah, I'd say last words, just keep an open mind, right? Like no one can predict the future, you know, and you have to earn it, right? So keep an open mind, and you have to earn it. You have to earn it by doing the work, you know, doing the hard yards. You know, everyone's doing it. It's a struggle, you know, it is, whether you're at a startup, whether you're at a corporate, you know, there's highs and lows. Entrepreneurship is eating glass, you know, and so, but you just got to do that struggle, you know, and keep an open mind, right? Like always rethink opportunities.
I love that. Own your future. So here's Farron Blanc. Farron is at Legal and General America. And if you want to find Farron, you just need to find Farron on LinkedIn, actually. I love you got the short name.
Yeah, that's one of the advantages. The advantage of a unique name, you know.
So thank you for your time today, Farron. Thank you.
No, thank you.
If you like this podcast, subscribe now, share with your friends, and if you enjoyed it, please give it a 5-star review. Also, if you want to cover any specific subject with me, contact me on Instagram under Sabine VdL Officials or LinkedIn under Sabine VdL. Thank you.